Good morning, Dornbush download number 82. Andrew, Dan.
Morning.
Good morning. And what's going on? Bit going on at the moment. Share market's bouncing back. It's up about 64 at the moment after being off in a big way on Tuesday. Maybe too many Easter eggs. And then yesterday...
Had a real fade in the afternoon yesterday.
Yeah, it was really interesting. Started okay and then fell in a heap and then tried to rally and faded. So, in other words, it's the theme all year is it's got no idea where it's going, and that seems to be holding pretty true in school holidays. Bearing in mind, in school holidays and around Easter, trade tends to be a bit thin as well. A couple of things we wanted to talk about today. We wanted to talk about banks, and I know we've bashed banks to death. Also around dividends, but maybe a contrarian view around dividends. And then also just wanted to talk about the oil price and the impact that has on shares, and maybe a couple of energy shares you should be thinking about. So
before we start there though, daylight savings finishes on Sunday, so the market's open at 10 till 4 on Monday.
You are all over it like a fat kid on a cupcake, aren't you? So absolutely. Politically incorrect joke there, thank you very much. So Monday...
They're quite nice cupcakes actually.
They are fantastic cupcakes. So 10 till 4 markets trading as of next week here in Queensland. Of course, for the last 6 months it's been 9 till 3.
Yep.
But anyway,
back to the norm.
Back to the norm next week. So let's talk about banks and dividends. So I know the last couple of weeks we've been talking about dividend stripping and heard a few people talk to us about that. Interestingly, last Thursday, and Andrew the cynic, which I struggle to be, we saw that we saw ANZ come out with an announcement saying that they're going to increase their bad and doubtful debts provision. So they've had a look at their books and said we've got a few people going bad on us, more than what we told the market, in particular in the energy space. And they have to increase their provisions by about $100 million, or about 14%. And same day, we also saw WESTPAC come out and increase their provisions more on their personal loans, which is a bit interesting, by about $25 million. And there is
the market doesn't believe NAB's 84 million provisioning. So,
and so historically, we really seem to be at the bottom of the cycle when it comes to provisioning for bad and doubtful debts. It's about 0.14% of all loans written, so it's nothing. The historical average is about 0.28, 0.29, something like that. So you would expect that just historically we've got to increase a bit, but equally so...
Still a drop in the bucket though, isn't it?
Compared
to revenues.
But don't forget they're heavily geared, like banks are geared like 7, 8, 9 times. So even a small increase can have a fairly big impact upon profit. I guess where I'm coming from, and we're going to sort of play devil's advocate here in a moment, there is actually a potential, and if you look at earnings consensus, there is actually the potential for dividends to be cut in the next sort of 4 to 6 weeks. Not by a huge amount. Consensus seems to have dividends dropping by about 5%. But
history is against it though, Andrew. Hey, 3 cuts in the last 38 years on bank dividends.
Oh, it is unlikely.
I think the other thing I was reading too, I think if all the oil and all the resource loans fell over, that equates to about 4% of their total mortgage book. So it's really small, isn't it, in the big picture? So
it's not huge.
It's not huge. It's tough to call.
It is. But I mean, I'll see your 3 cuts in 38 years and I'll raise you a BHP 75% cut in dividend, the first dividend cut since 1988.
Yeah, totally different case though, isn't it?
It is, but I guess you're right. But I guess more so, this is the season for dividend cutting. If anyone's going to be cutting dividends, now's the time for it to occur. But, I'll now contradict my own argument. CommBank is the canary in the coal mine from my point of view.
Yep.
And if CommBank does not cut their dividend, and they've got one of the biggest exposures to the oil and gas guys, and they haven't cut their dividend, they held it steady, then that to me is a big tell that it won't occur. But again, I guess our faithful Dornbush download viewers, just saying to you, there is the potential for it, and where there's a little bit of haze, I'm not saying there's smoke, but where there's a little bit of haze, there is potentially
It's going to be interesting to see if it actually does happen. Are rates going to go up anytime soon, Andrew? You wouldn't think so, would you?
But, and in fact, actually the opposite, saw CommBank come out yesterday and say their Aussie dollar forecast for the end of the year is 78 cents. So, here we are, 3 months ago going, oh, it's going to 65 cents, you know.
And that's where the RBA wants it though, isn't it?
Oh, they need the low
65.
dollar.
So
And
maybe we can see some rate cuts coming.
we'll actually see, well, my view, and I'm sure you'd agree, is that we are going to see at least a rate cut this year.
Interesting article on Bloomberg this morning that I was watching while making a coffee. This economist was really saying that he thinks the Fed's going to up rates in June, like April's out of the sort of radar now, but perhaps June. What sort of effects that going to have on us as well? That'll be interesting. That'll bring our dollar down, you'd think, because money will go back into the States then. So.
And again, they've been flagging that they want to increase rates, but, with this global uncertainty, will England leave the euro? Brexit. What's going on with China at the moment? We've spoken many times about the Trumpinator. All this sort of stuff, Donald Trump for those playing at home, all those sort of things going on at the moment. It's just creating this uncertainty, which is probably one thing that's holding the US Fed back. Anyway, we can talk about that all day.
And then we've got the oil. There's a segue for you.
I was going to say, you segued that perfectly. So one of the interesting correlations or relationships we've seen this year with markets, this calendar year, is how the oil price and the share price share index do tend to sort of follow each other.
Yeah.
And over the last 4 weeks, we've seen oil bounce off a low of around $30 back up to closer to the 40s. But again, it's just started to come back a little bit of late. What's your take on it?
I think it depends on whether Iran comes to the table and limits the supply. And there's a bit of talk that might happen, and that will underpin the value of oil, I think, for a bit. It's really been crazy, Andrew, hasn't it, how the markets have actually moved in sync? You'd think with cheaper oil, that's a benefit for manufacturers, the consumers right across the board. You'd think it would be going the other way.
But again, I think you're right, but equally so, like again, we've got those banks that have got that huge exposure. We saw that big investment, in particular in the US with the fracking guys. And, that'll be one of the things that actually puts a bit of a cap on the oil price, because at $70 a barrel or more, that's where the fracking guys start making money. So the Saudis and the Iranians and all these other people want to keep that US fracking stuff out of it. They want the US reliant upon their oil, and so therefore you're going to continue to see that oil price trade, in my view, probably topping out at about $50, bottoming out at about 30, and over the next 12 months or so. So if we believe that's the case, what type of energy shares would you be looking at?
I think Beach is a good example. BPT, they've really been sold off, haven't they? Went from maybe $1.20 down to 50 cents. They're back around that range now. They're, pushing on 65 cents this morning. I think if they bust through that 65, they could have a bit of a run. And the other smaller one there is SENEX, SXY. They've had a pretty stellar run in the last couple of weeks. If they get above that 40 odd cents, there might be another 10 cents in there, because they've moved away from a lot of gas. They're more oil focused now. And then there's SANTOS. It just seems to be slowly getting a bit of strength and momentum around it, doesn't it?
And if you look at a lot of the financial press this week, SANTOS really has come back into the fore as to the one to buy. I guess my caution would be, though, that it's got a very weak balance sheet. Really weak balance sheet
at the moment, yeah.
And if the oil price was to trade back towards that $30 a barrel, that's going to be pretty tough for them. Probably the one that I'm looking at is Oil Search. Oil Search, I think, is sort of OSH is probably the one that strikes the best balance between some growth opportunities. Remembering Woodside, we're looking at them last year, and they got to about $8. They're now back at about $6.70. I think they bottomed out at about $5.60, something like that. So they look interesting. Woodside, of course, is the tried and true, but the thing with Woodside, very strong balance sheet, but it's got no growth.
No.
So, and of course the other one that we've got lots of clients holding is Origin. But again, Origin, they've really sort of set their sail on LNG, and of course the LNG price is linked to the oil price, and as we've just said, the oil price isn't going anywhere soon, so you would.
They still do have that retail base, though, Origin, don't they? So that's a real benefit for that business.
And so one of the get out of jails for Origin. So what I mean by that is last year they spent $12 billion at the top of the LNG price market. LNG's now dropped by 2/3, so they're now looking at options. One of them might be, as you're saying, to split the business between that sort of retail electricity business and the LNG business. The other alternative, which Santos is hoping for, is a merger between the two. So there's certainly, you're right, in that energy space with some of the ones you mentioned in particular, the beaches and the SENEXs in particular, a lot of potential corporate activity. We're already seeing drill search being sort of gobbled up. You know, there's certainly potential for those small ones.
I think we'll see a lot more of that, you know, with those LNG plants pretty much taking out the entire gas usage of New South Wales out of the system. You know, I think maybe time for those smaller ones will come again. It's been a long wait for those people in there though, hasn't it?
Absolutely. Absolutely. Well, that's about it from me. Anything else you want to cover?
No, all good.
We're all done. Till next week. Thank you.
Cheers.